But a lot of you are going through these futures live classes, and in my understanding, it can be overwhelming. It can feel like maybe I shouldn't have done this. Maybe this is way too much information for me. So just to take you back to those points that matter, um, I'm going to be taking you back there today, right? I just want to quickly fight with this complete this slideshow again. That seems to be wanting to start all places that I don't want it to start. Let's see if I can get this to do the right thing. There we go. Pray for PowerPoint. Those of you who are prayer warriors, pray for my PowerPoint. All right. Okay. So I wanted to cover this particular point again, just a reminder to everyone about the line placements on the zone, right? Packing to get on the road right after the class, no problem. Did anyone get this the first time? Certainly not me. I felt like I was learning a new language, but it gets easier. Yes, Dan. Definitely not me, right? When I signed up for SARS, I didn't think I could do it, but I believe God gave me the ability. Exactly, Vicky. That's how we should look at it. I can do all things, right? Um, quickly, just to recap on the zone placement here. Now, I will say this: the actual chart you see in front of you is not exactly how it looks because it's obviously using the same zone, just to make sure that you understand the different placements on it, as to not add more confusion. But I want to encourage you all that even though it's a different language, as you guys are saying in the chat over there, the hardest things in your life you have already learned, right? You've already learned to walk. You've already learned to speak. You've already learned to comprehend. All of those things have prepared you for such a time as this, right? So all those things have already been done. You've already overcome some of life's difficulties. Don't put trading on a pedestal that it does not deserve, right? You can do this. Now, proximal line placement, real quick. I want you to see where these proximal lines are being placed on each three of these methods of entry. And I want to remind you when I use each one of them. So the first one, if we are entering with a proximal line at the wick over here, right? We want to make sure that if that happens, remember it's not the screenshot you're seeing here. I'm telling you what it is. And Brandy's copied it in already, right? Which is great. And everybody can copy that from Brandy as well. But I want to remind you that I use this method when the wick, right, of the basing candles, any one of them, it can just be one as well. When the wicks on those candles are larger than the body of this candle. Now, this particular example does not show that, but I wanted to show you the three methods and then tell you when I use it. When there's more wick than body, I use proximal in this manner. Why? Because oftentimes you will see on your charts that price doesn't come back to the body, it just expands away while trading into the wick. Then the preferred method, which is the one in the center, I use when price action has more body in the base than it has wick, right? That's when I use the preferred method. And when I use this method, which is proximal line at the lowest body in the base, is when we have a very long wick. Again, this particular example doesn't show you that. But when we have a very long wick candle, I'll use just the wick. And it has to be a long wick at the bottom, right? That's the difference between this one and the first one. And of course, the inverse is true for if we were looking at supply zones, right? The inverse is true if we're looking at supply zones. Okay, I'm just drawing your attention to the three different methods over here. Let's see. Terry says thanks. Oh, sorry, I'm messing up. I'd love you to show examples again. I struggle determining which one is correct. More body than wick or more wick at the bottom. Yeah, I'll show you that on the charts as well. So these are the three methods. The preferred one in the middle. Fewer trades, more profits. More trades, less profit. Preferred is the best of both. But just besides having preferred, I like to have conditions for when I use which one, right? And the conditions is literally as Brandy has posted there, right? And the reason we have that conditions is so that we don't start oscillating between should I take this one now or should I do this one now? Should I trade that one? If we have a hard rule that we can utilize to find this in the best way, then that can make it a lot easier for us. Liz G says, this was huge for making better trades for me. Thank you, Chadwin. My pleasure, Liz. Right? My pleasure. Now, I'm going to show you that on the chart. In fact, let me bring up a chart right now, and then we'll talk about that, and then I'll move on to the next. So I'm trying to, as I said, recap all of the things that I taught you in here that I think is valuable, right? That's the aim here today. And this is certainly one of them. Now, remember though, when it comes to curve, we are always going wick to wick, right? When it comes to curve, we're always going week to week. This is about zone. What we're talking about here now is about zone. Okay. So let me bring up a chart real quick to get a clean chart. I'm just going to go to a, you know what? I'm going to go to, it doesn't have to be a futures chart. I'm going to go to a Forex chart since you guys learned about Forex market here as well. Let me cover that question at the same time. Give me an 8 in the chat if you guys can see my screen. Okay. So early on, we spoke about not seeing Forex, right? So if you go over here and you go to your symbol search, you simply click on this. It won't say Euro USD there. It will say whatever you have there on your chart. And normally everybody's defaulted on this after some time, right, of adding futures. But if you go back to all, right, or if you wanted to, you go back to Forex, right, you would get the Forex specific symbols when you type that in. So you'll need to know the Forex equivalent. But again, that's something you could just easily type into ChatGPT. Give me the top traded Forex symbols. Or if you've done that for the futures already, you can simply say, give me the Forex market equivalent thereof, and you'll get these. If I take the Euro USD away here, right, now you'll get all of them, right? All of the Forex symbols. Does everybody see that? Let me know in the chat. And then, of course, you can click on any one of them and add them to your charts, right? Like that. If I click that, I'll have it there now. But if you want it permanently, you can add it to your watch list by going over here. You've got your list already. And you go add symbol. Same thing comes up. This time, when you hit the plus icon over here, it will add it to your watch list. So if I go and hit USD JPY over there, I will now have a USD JPY at the bottom over here. All right. Is the Forex the ICE one? The Forex one is many different brokers, right? If we're talking about the DXY, like going DXY over here, and you have it on all, I already have it on my chart. The DXY, if you're adding the DXY one, I usually use the TVC one. TVC, right? Remember, I can't get the I don't have the ICE market, so the TVC, right? Okay. Yeah, it does add it to the bottom. You have to move it up. To create another watch list, you simply go over here, you drop down, right? And you can do a lot of things. You can rename, you can create a new list, you can even upload another list. So you can go ahead and click create new list, give your list a name. It will then clear this and then be empty there. And then you can swap between those lists by going back by this drop down here, and your list will all appear at the bottom over here, right? And you can swap between them all. Okay. When a new contract comes up, you have to delete the old one and add the new. Yes. If you're trading the new contract, yes. Okay. So yeah, that's how you do that. And then quickly, let's recap what we just spoke about now. So here's an example. Well, let me find a better example because I don't want that one to, there'll be other questions on that one. And as always, whenever you look for example, you can't find it, right? But here's one. Here is a candle over here that has more wick than body, right? More wick than body. Does everybody see that? Can we get a copy? Can we get a copy of your Forex list to use until we buy CME? Yeah, I can tell you the top. This is not, there's a whole mix here though. I don't have just the Forex list. There's a whole mix of everything. A bunch of everything in between here. I literally just add things as people ask about it. Okay. Can we see over here more wick than body, that particular candle? And what tends to happen when that occurs is the very thing that happened here. If you had chosen the preferred method on this zone, you'd never get entered because the preferred method would put you here, right, as a supply. But if you use my method of understanding which one to use when, which is this candle has more wick than it has body, you'd get entered into that trade and it will fall away. That's amazing, right? Right? Now, Brandy, I know what you are asking, which is, okay, then when do I use the long wick one? The long wick one, if I'm wanting to sell, then this one needed to be a wick like that, right? Be the highest point. And then instead of me getting entered here, I would move that up to wick only. And I would expect price to run into that area to take that trade. right? So that candle would have had to go much higher than it has on this side. Okay, but you'll see this oftentimes. If you're in a situation where you're really close, it got really close to your entry and then ran away, that is usually what it's doing. Now, here is more body than wick, right? Even the ones that have a small body compared to the wicks in total. Yes, it's always yes. So if you have a small body and you compare it to the entire wicks in total, yes, on both sides of the market, right? So here's another example. This one is kind of more body than wick, right? And even though it's a small candle, it does come to the body, right? It comes to the body over there. So on this one, I can use the preferred method. Enter on the body over there, right? So by very long, is the one-sided long wick reading to be the wick longer than the body or longer by a multiple? No, it's just visually, right? And it depends on which side you are trading. If you believe you want to sell and you have a very long wick on the high side, that's the long wick you'd use if you want to use that, right? If you want to use this way of doing it. Does it apply to stocks? Yes, it applies to all markets. I'm trying to find more examples here. You'll see it a lot on your entry timeframes. That's why it's valuable for me to teach in the first place. You'll see it a lot on your entry timeframes. Here could be, this is not a perfect example, but let me show you guys here. See how this candle goes much higher on the top side? That would be an example where entering there would be better, right? Then let's say entering here, even though it's a small discrepancy, but judging by that wick, we could stay inside of the wick. Yes, it's not even a zone. That's what I'm saying. It's not the perfect example, but I wanted to show you just that long wick aspect where the wick is sitting. And this always happens when I'm trying to find organic examples of it, then you won't find it. But then here's another example for the larger wick, which is more common than the others, right? Price hits that, and in fact, even here, hits it again and falls away both times. Had you gone with the preferred method, which is drawing it up to that body, you'd never get entered. Do you see that? Right? Yeah, I see that. Okay. And then what was the other one? And the inverse is true as well. When you have a long wick at the bottom, like this one, I'm not sure if this one works. I just want to show you an example of it. Here's a long wick at the bottom, right? And look where that trade goes in, right there, right? Goes in right there, and then it shoots up from there all the way till there in the long wick, because that's long wick at the bottom. And if I wanted to be a buyer there, that will be up. Now, I'm not looking at trendy. I'm not looking at all of those things, right? You say this one you're a question, but why though? Let's say you wanted to be a buyer, Brandy, right? Yes, it's more wick than body in total. That's true. But where is the position of the wick more prominent? That's your key differentiating factor. If it's equal on top at the bottom or relatively equal, like this one, relatively equal, then we take the whole candle. But if it's very pronounced on one side, we take the side that's pronounced, right? Okay. And you'll see typically a lot of this. You'll be really surprised. The main one I want you to apply is this one, right? Now, here's an example where likely you might have put it at the long wick on top and missed it completely. And that's okay. But my preferred one is this one. Put it here so you get the trade. More often than not, you get the trade here. Does it go into there? Yes, it probably just licks it. But that would be the surefire way to get that actual entry. And you'll see a lot of this, like here as well, into the wick, runs up, especially at major turning points in the market, like right at the bottom, right at the top, you'll see a lot of that. Okay, let me keep going. Might not have met entry there, Tony. Might not have met entry on that one, right? Okay, let me keep going. Was that valuable? Hopefully, you guys got something out of that. I'm going to take you to another slide that I want you guys to remember. And that is in relation to breakout signals, right? Okay. When it comes to zone, we classify our leg candles or series of leg candles as the same color. When it comes to breakout segment, we're not worrying about the same color, different colors. We can see because we're looking at trend. Trend is breakout segment, right? So we're looking at the demand and supply imbalance, and we want to see this explosive rally above. I want to show you the difference, right, between a breakout segment and a non-breakout segment. Thomas says, yes, longer wick, but then you have to adjust for risk to reward. Yes, Thomas, you can adjust for risk to reward, but keep in mind, if it's more wick than body, and now that you've seen this, I want you to see how many times you're going to have a situation where if it had more wick than body, especially on your entry time frames, it'll just miss you completely if you added that the preferred method, right? Okay, let me see. Just thank you, Terry. Good. So helpful. I printed out, hanging all over my office. Okay. Hang all over my face. You guys are funny. So demand imbalance, right? We want to see that explosive move above that particular high to create a breakout segment, which is known as a breakout rally as well. It's important, right? Consecutive higher closes resulting in a new high in price. But the main thing is it must close above that. Can we see that? Right? And this is an example of price action that has a breakout segment, which means we can look back in price to find a trade, right, in this area if there is a good zone. That's when we can do it. If we do not have a breakout segment, right, then we can't. Terry D says, if the wick is long on both sides and we do not see profit ratio, is it worth it? We just don't trade. Yes, then you either stay away if the profit zone doesn't work, Terry, or you decide to use one of the other methods, right? And you just risk missing it. Okay? You are certainly a master of the technique. Originally, strategy said to have a win-loss ratio of 50% with your little tips and risk management. I can only assume if we follow the rules, we'll do better. Yes. In fact, surge strategy only requires a 25% win rate to break even, right? If you're trading for 5 hours. Of course, you need to do a little bit better than that if you're trading for less. But you can work that out. But Terry, thank you for that. I appreciate that. Right? Yes, we will miss a lot more trades with risk management means. We won't have hits that stop us out. Yes, trading, by the way, write this down, everyone. This will be one of the biggest lessons you learn about trading as a whole. Trading is not about adding winners, right? Trading is not about adding winners. It's about removing losers, right? Removing losers. Can everybody write that down? It's not about adding winners. It's about removing the lost trades. The lost trades are the ones that don't fit your rules or violate a little bit of your rules or just weren't falling on the right side of probabilities. Now, the ones that don't fall on the right side of probabilities, nothing you can do about. But removing the unnecessary losses is also a way to put money back in your account, right? There's a good book about it called The Best Loser Wins or something like that. I haven't read that one, but I have heard that is very good. So I agree with that. Right? It's not about increasing your winners. And that's the misconception because we're all trying to take the next winning trade. But what we should be doing is trying to avoid the next lost trade. We got to put the right thing at the right place. In fact, we don't, and this is always my analogy for this. The Bible says that darkness cannot comprehend the light. You cannot get darkness out by carrying darkness out. If this room that I'm in now became completely dark and I blacked out all the windows and I came in here and I got a black plastic bag and I grabbed as much darkness as I could and I walked outside into the sunlight and I opened up that bag, guess what? There'll be no darkness, right? Because darkness cannot comprehend the light. I cannot take this darkness out. However, if this room remains black and I come in with a simple candle, I walk in with a candle and it's pitch black dark in this room and I walk in with a candle, this candle will illuminate this room because that candle brings the light in. I can bring light in, but I cannot take darkness out. So the solution is in Christianity, not to deal with the band-aid of an issue, but to deal with the root of a problem. And the same thing in trading is we cannot guarantee winners, but we can work on not taking more losers, right? That is why the Bible says if you clean up the house and it's not occupied, then more come. Bring light in. Don't try and get darkness out. Okay, so what do we need to do? We need to make sure that we get breakout segments. So here's an example of a breakout segment. And the reason I brought this on is because I wanted to show you what it looks like when you don't have a breakout segment, right? And here's that example, right? This is not a breakout segment, but look down low. There's a beautiful, strong rally, right? There's a beautiful, strong rally over here. It came out very energetic. And how many of us have been in a situation, right, where we have seen massive runs and thought, oh my word, the market's going, it's running. Let me quickly jump in this trade. And then what happens? It just turned back on us, right? and does this, goes sideways and takes us out. Who's been in that situation before? Therefore, we want to see the intention first. Let the market first show us what it is intending to do before we trade it. This is not a breakout. Since we did not go above the high, and I know we're looking at this now like, oh, surely I would not have tried and bought that. But if I eliminate all these candles from where my mouse is now, and you were in that market at that time, you would have been severely tempted to take that buy, right? As hungry as I am now for KFC, you guys would have been hungry to take that trade, because that jump up there would have told you, let me get in that trade. But because we don't trade areas without the breakout, we're not going to get into it, right? Amen? Amen. Then I wanted to show you this one. It deals with zones, but I wanted to also define something on the slide for you, right? Let me see. We're all going to have to have KFC for dinner. I know that I'm doing it for lunch. Seeing this at the turn of the Globex has been tempting. Just ignore Globex. Seeing this at the turn of the Globex has been tempting to just ignore Globex. Okay. Yep. Right. Again, Globex is good when it agrees with what Surge Strategy already says. If you're putting Globex before Surge, you're likely going to lose the trade. Right. We want that first see the zone, first see the trend, first see the direction, curve, everything placed. Let's see what Globex says. Odds and answer. Globex agrees with it, we fire away. Globex doesn't agree with it, I'll still take the trade, right? Because Globex is an odd and answer to the strategy. You guys tracking with me on that? Now, steps to identify the qualified demand zone, drop base rally, right? Going from right to left, find the zone. Couple of things I want you to see here, right? A couple of things I want you to see here is number one, how do we find the zone? We start from current price without cutting through candles. We look to the left until you find a breakout rally. What does that mean? A large imbalance in price. If you look through on demand, it's going to talk about an explosive move or large imbalance in price. What are you not seeing here? It does not tell you to look for a base. What do you look for first? Right? What do you look for first? You look for a imbalance first. You guys tracking on me? Tracking with me? A breakout, a rally first, above the last pivot point, not for a base, right? Yep. Single series of candles of the same color, right? This is not trend. This is zone. Trend can have multiple different colors. Zone requires series of the same color, right? Oh no, Doug, that name is gonna catch on, Doug. That's gonna catch on. People are gonna say, not Mr. Curve anymore. I am now Coach Colonel Saunders. Be careful that I'm gonna get you, Doug. If that catches on, I'm gonna get you. All of a sudden, when you guys start posting about Colonel Chadwin, that's gonna be, people are gonna get confused about that, right? If one red popped in, is it still an impulse? If a red pops in here, no, because it's a series of candles rising. If we get a red going down, what does that mean? There's been a pause in the market. That red constitutes a new base, not a rally anymore. Can a rally be up? Can a rally, which is up, also go down? No. In trend, yes, but this is not trend, right? This is not trend, because trend is looking at the overall move of the chart. Zones is looking at a leg in and a leg out and the basing area, right? Now, look here quickly. What's important? How many candles need to be the same color? Of a leg out? All of them. There's no specific amount. Remember what is a leg out? The videos on demand says a single, so only one, or series of candles. Anything larger than one is enough, right? And the leg in as well. Single or series of candles of the same color, right? Okay. And you know what, Angela? Go back to the on-demand videos. And like I told you guys from the first session, maybe some of you haven't been in the first or second session, go back to it, re-listen to it. And once you've heard Kayla say it, it will click, right? Now remember curve, guys, let's not get things confused. Curve, right? We're looking week to week, and curve is a zone. So when we look at zones in terms of curve, yes, the leg out is a single or series of candles of the same color. The leg in is a single or series of candles of the same color. And the base is everything in between, right? Or the lowest candle. Remember how I also taught you about looking at the lowest candle when you have a drop in and a rally out? Here's an example of that again, right? Here's an example, okay? Tony, you have to check the next time frame up to see if that different color based is real swing point or not. You also use a lower time frame. You guys are getting confused with trend. I'm not on trend. This is zone. We go up in time frame on trend to confirm. I want you guys to see this is zone, right? What I'm trying to point out to you when you're drawing zone, we are looking for a leg in and a leg out, right? Trend, we have multiple colors in it because it swings in, swing out, and we up the trend. A trend on a lower time frame, which I'm getting to, is a higher time frame zone, right? Okay. So what am I pointing out here today? We go from left to right, right? We go from left to right, and what do we look for first? Not basing candles. We look for imbalance because good zones are found around imbalance. Good zones are not found around many bases, right? Okay. Again, everyone, there's no way I can teach you everything in one class. I know how you feel because you're wanting all those questions answered. I get it. Just keep coming to the classes. I will answer them all, right? I don't have a problem answering the questions. I just know that you won't be able to get it all in one go, right? Okay. Great, Terry. Okay. So we go down, we find it over there. This is zone. Look at top, zoning process. Okay. What is the main thing I want you to learn out of this? Is stop looking for bases and then making it a zone. Good zones are found around large imbalances, not good bases. Good zones are found around large imbalances, large rallies, large drops. Following with me? Secondly, right, you can draw the zone like we spoke about earlier on, but here's something else I want you to see. Where is the zone drawn? I'm trying to teach you where good zones are found, right? The good zone is below this pivot point. That's where the good zone is found, right? Okay. Now don't go bomb Herman with questions, guys. That is go bomb Herman with questions. No, man. Right? Okay. Leg in, leg out. Here's you want my quick fire rules for leg in and leg out? You guys want that? Makes it easier in my mind to remember. Here you go. What is a leg in? It's a single or series of candles of the same color in the same direction. Right? Or leg in, same thing, a singular or series of candles of the same color in the same direction. We don't have time for me to tell you why I added in the same direction because it seems like shouldn't everything that has the same color go in the same direction? Not always because the market gaps, right? So we score the zone, but that's not important yet. That's not what I wanted to show you here. And lastly, I wanted to remind you, right? I wanted to remind you just by this chart on the screen, right, that all the trend actually is a rally-based rally on a higher time frame, right? Rally-based rally on a higher time frame. There you go, Herman. Thank you, Nicole. We'll review Globex in interactive practice today. That's perfect. He loves the Globex as well, so he can go in much more depth in that than I can over here, right? I'm gonna struggle to go back to the other one now because I am not using. It's not off each other. It's very random. Okay, I found it. There you go. Let's screenshot that quickly. Let me know in the chat when you got it. Okay, awesome. So just a reminder again that a lower time frame trend is a higher time frame rally-based rally. That will, for some of you, that will be the biggest thing you ever learn. It will help you out so much. Okay, now let's go to the charts again, right? Let's talk about yesterday because yesterday we did a quick rundown of all the assets, right? I quickly want to show you one of them. I want to remove my PowerPoint quickly and bring my TradingView screen on the middle one. We have too many screens. And we'll do this, save that, close this. So yesterday, if you all remember, right? Yesterday, if you all remember, we looked at this chart on M6E. It was one of our contenders for a possible trade, right? And what was something that we needed to see? We had an alert at the high that told us that once that alert happens, we will have a breakout segment. You guys remember that, right? And that after that breakout segment, which by the way, the trend was on the 15-minute. Okay. After that breakout segment, which happened over years, we closed through this. We were waiting for that. We would then have been left behind with this zone over here. And what did price do? Hits that entry. And before it topped out, it was running a 5-to-1 trade. Into the opposing curve, yes, but it was running a 5-to-1 trade. Right? Can you guys see? This would have been an overnight, no, in London session. So in my time that I trade, right? Now, sometimes it happens in London session. Sometimes it's going to be in New York session. It's the luck of the draw on that particular day. But that would have been at my time. But it's more so for you to see that is what happened, right? That is what happened. 2 to 5 a.m. Yes. Okay. Then we had the other ones that we looked at, which was the MGH. Now look at this. Remember, here's our alert. You can still see it's on here, right? Look at the alert. It still has its name and everything. Place a limit order for sell, make big money like Julie MBA. But here's the beauty about waiting for that. Now, of course, we were talking about some other stuff here on a lower time frame, so we take that off, right? But I was talking about what we were waiting for in terms of the trade. Look what happens. We don't get that breakout segment. If we don't get that breakout segment, can we trade this? No, we can't trade this. Why? Because there's no breakout segment. And this is a clear example as to where you'd be kept safe by taking the correct strategy. Now, when price comes up and goes above that, it terminates the trend, which then tells us we're no longer in a downtrend and we must adjust and reset our curve, reset our trend, do all of that. Now, it is December, everyone. So this is kind of like the best we have to look at now, which is up and down, up and down, up and down. Really no trade nonsense, right? It's very close to Christmas as well. I told you before, and this is what's going to happen. But I'm trying to show you we would be kept safe because we didn't get that. Remember, this is where we were yesterday. Exactly where I've drawn this is where we were. Since we did not break out, we cannot expect a continuation of the trade down. Now, what's important to know here as well, if you're making notes, the high probability trades, they come during session time, right? Session time, which means even though I had a breakdown beforehand, if they don't come during the time that I want to trade, in other words, it doesn't break down when I'm supposed to get a breakout segment, then I can't take that trade. This is why it comes through and turns the other direction. Now, is this bad? No, it's not, because most times if it turns the other direction and it starts producing an uptrend to a curve point, not this particular day because there's nothing good here, then you can get involved in a trade to the other side of the market, right? Now you at least know when to avoid it and when to actually trade with it, right? It's important. If we don't get that breakout, we don't follow it through. MCL, I think, had the same thing. Let's see what we got here. No, MCL is slightly different. MCL, we were waiting for a breakout above that high, right? We've got that breakout. We got that closure. Okay. Now we ask ourselves, let's see, when did it come in there? There. Now we ask ourselves, when we get that breakout, a 15-minute trend. But what did I teach you? If we have a 15-minute trend, that 15-minute trend must be a rally-based rally on a higher time frame, not higher than the curve time frame. So let's see. We can go all the way up to the 1 hour. Do I have a rally-based rally over here? In fact, do I have a rally-based rally anywhere here? No. Right? That might look like one, but you can't have this be equal to the leg out candles. So what does price do? No good zone here, sweeps through it. Remember what I also taught you yesterday. The trend time frame must have a good zone if I'm going to take it. Here's another way you can get kept out of the actual trade. December's been frustrating. Might as well take a trading vacation on the last 2 weeks of the year and just use the time to review. You can take a vacation from live trading, yes, but never take a vacation from study. Never take a vacation from study on the charts. With 2 or 3 weeks away from it, you'll feel like you don't know what you're doing anymore, right? Yes, Terry, that's what you're referring to. I see what you mean now. So when we bump up our time frames and we do not see a clear rally-based rally or drop-based drop in a downtrend, there is no reason to get in this trade. Why? Now you see, if you look for bases, I'm going to show you what you guys might be doing. If you look for bases, your eyes will do this. You'll go down here and you'll say, you know what? I see a good base here. But that's not how you're supposed to look at it. If you look at imbalance with my rules, what are you going to see? A series of candles of the same color in the same direction. Note, I'm not including that red candle. That's my leg out. Okay, move back from there. Where's the more prominent one? A series of candles of the same color in the same direction. Right? Now I see that one. Which means all of these in between here is the base. Right? We go for 1, 2, 3, 4, 5. 5 candle base is not to my liking. I'm going to avoid that. And the markets show you that. It shoots through your zone and starts to go up. There would have been a better chart to trade on this particular day. All right? Oh, you guys still with me here? Come on, Dan. That's exactly it. For every live chart, listen, you have to do more historical backtesting than you do live trading. That's the only way. Right? That's the only way. Jax is 8 in the chat. Right? So you're seeing this. There's method in the madness here. Okay? There's method in the madness. This is how we analyze, how we see whether or not there is a good trade. Now look, the Euro one, although it happened in London, that was the one that had something good and it played out. It had everything good, right? There's your zone. There's your trend. There's your rally on the higher time frame. Everything, and that's the one that played out. You don't need many trades. You just need good ones, right? Good trades. We're just mesmerized and speechless, right? Okay. Let me see what else I got written down here. I wanted to make sure that I remind you all of the importance of understanding the M's and W's, right? Let me make an example here quickly. Let me clear, I'm going to clear this chart. So here's nonsense on here. And I'm going to replay the chart over here. First of all, everybody tell me, where must I see M's and W's? Where are they most prominent? Where are they most prominent? Let me know in the chat. And where are they most useful for that matter as well? Right? Useful at the curve, everywhere on the chart, but most useful at the curve points, yes. Top and bottom of the curve, yep. Yep. Okay. Now, on this chart, let's assume that this area here is a curve, right? Why did I use that? I could just type it on, right? Let's assume that this is a curve. Let me ask you a question in the chat. Is this an M? Is this an M over here? My apologies, Rachel. My apologies for changing so quickly. I'll slow down. If you answered yes, the answer is no. Always assume that I'm tricking you. I'm tricking you, right? This cannot be an M because an M requires a body break over here. There is no body break. Of course, I drew down slowly and beautifully for you all to get tricked into it. But you must not do that because the market will attempt to trick you as well. No body break, no M. Right? No body break, no M. In fact, Lisa, this is not even a terminated trend. Right? If the trend is up, this is not a terminated trend either because the terminated trend requires a body break beyond this low. Right? No body break, no M. I had a curve drawn on gold earlier. It wick past my curve. It wick past my curve, W, but made a W as part of that wick. Wick past my curve, but made a W as part of that wick. is that wick sufficient to break the curve? Yes, when it comes to curve, a wick right through an entire curve is sufficient to no longer keep that curve on. However, Jack, we need to ask ourselves if whether or not the trend, remember, we don't trade, if the curve just breaks, we don't just change our entire direction, right? The trend needs to also continue then through it. Now, if the trend created a W, even though it wicked through that curve, firstly, check your correlated asset classes to make sure that maybe on the others it didn't wick through the curve. Secondly, if it did wick through the curve but came back up, gave you a W, in times like that where it's uncertain whether or not you think that curve is going to fail, then wait for the continuation. Don't take it on the W. So if there's no M, there is no termination. Exactly. Right? Okay. So let's test that M theology again. Right? Let's make it more pronounced here. Okay. Which one of the three is not an M? There we go. Now we're getting it, right? Now we're getting it. No break, no M. One thing is consistent of all M's, they break the center point. I won't get you this time because I set you up for it, right? I set you up for it, Angelica. I set you up to get it right. First, I trick you, then I reinforce. That's always my way of doing it. I first trick, then reinforce. Trick, then reinforce. Right? Oops. Let's make a quick assumption that over here we have traded into the curve. Right? Do I have a W, everybody? Yes or no? We aren't trying to trick you, at least most of us. Shadow is a joke. Right? Do I have a W here? Yes or no? No, Terry, what are you doing? You're reinforcing that name, right? You're reinforcing that name. Everyone's going to call me Colonel now. Okay? Everybody's bets in? Nicole, I just got that message. You're making me laugh. No. Let's just, yeah, it can go to the curve twice. I just want to find out, do we have a W? If your answer was yes, you're correct. If your answer was no, you're incorrect because I tricked you again. You're looking here, but we just don't have a breakout segment there. But we do have a W here. Body close above. All right? Why am I doing this? There's two theories, yes. Why am I doing this? Because I need you to remember that you're not only supposed to look right here, but you got to look backwards as well. Right? And it did close past that center point. And I know you got thrown off by that second peak. I intentionally put it there because here's what you're going to do once you learn M's and W's from me. Is your mind is going to say, let me look at the last three segments only, and you miss that it came from somewhere else. Which means when this breakout segment happens here, you can start trading already. Or in actual fact, even here, you can get a trade already. This is why I drew this one on to show you that you need to look a little further back. Right? I'm trying to teach you to look at more than that. Yes. Right? And this is a common mistake. We tend to look at the last. In fact, this is what happens when people learn about breakout segments. Why I'm teaching you this here. When someone learns about the breakout segment like that, or they learn that a trend needs to break out, what I then find is they come to the market, they won't even trade here because they're waiting for a new one to get created. And then when the new one gets created, they say, but can I trade? Because here's a zone, but what about this is not a breakout segment. So they never trade. They just keep waiting for the next breakout segment, next one. So I'm trying to tell you, look back, because you could see that one has already happened, which means a new break here means a trade somewhere here, right? To continue. And there you go, Jack. Thank you. You just proved it. I know because it's the same cycle I've gone through. You discover what you need to look for, and now you pause and wait for that thing all the time, forgetting that it might have happened in the previous session, in the previous hour, in the previous day, in the previous 4 hour. So it's important to understand we must look back in price action to assess where we have come from. Does that help everyone? Right? So I told you we're doing a little bit of recap of everything, right? Sometimes when it's going so much after the breakout segment, though, I race a bit to get in before it changes. Yep. Now the trouble with this is, let's say for instance, this is not a good zone. Everyone, this is not a good zone. I'm just making an example. Let's say you get in there because you want to chase it. Then what does price do? Stops you out, goes back to your original zone, and then goes up. That's why we want to wait for breakout segment, because then this gets protected. If we get in late, we're opening ourselves up to a deeper run back into the original area before it goes back up. If there's a zone above the growth, can you rephrase that? If there's a zone, of course, yeah. Terry D, we do need a break to trade a breakout segment to trade a W. Yes, we do. Because the W, but the W will always have a breakout segment automatically, right? There's the breakout segment. But what my question was is, did we get a W from the curve? And the answer was yes, but I tricked you all by throwing on this extra one to make you think there's nothing. Right? If price had gone lower, we would have had to redraw the zone, correct? Which zone? No, we can trade nothing here. Remember, I said to everyone when I drew on that zone, this is not the zone we trade. I want to tell you what will happen. It will stop you out, go into something lower in the breakout segment. Remember from the class in the breakout segment, which I want you guys to review, where I covered the breakout segment first, we shaded that area, and what did we say? Any zone taken must reside in the shaded area. If it's not shaded, we cannot take it, right? This zone over here is not in the breakout segment. The breakout segment comes from the low to the high. That's the zone, the breakout segment. Anything here is not a breakout segment. It must be in the breakout segment. So we have no zone here because there are too many candles. Yeah, but remember, that wasn't the question here, right? The question was M's or W's. That's all I wanted. Right? M's or W's. Let's stay on topic. Right? Let's stay on topics, and then I will tell you. But yeah, this wouldn't be good zones because there's too many basing candles here. I'd probably wait for price to break out again, then give something clearer if it breaks out, and then take it. Now, look at here. That zone that wasn't a good zone became a good zone because of the series of candles out. Now it came back to that area and then ran away. We could have taken it like that, likely. Right? But when did it do it? After we closed above there. After we closed above there, this over here became the new breakout segment. Only zones residing in the breakout segment can be taken. Right? And shouldn't be in the bottom 50% of the breakout segment. If we are buying, it's not about the bottom 50% or the upper 50% for that matter. Let me show you again in the line drawing. If this is my trend, if I believe that this trend is up based on previous price action, right? Follow along, everyone. If this is my trend and this is my new breakout segment, right? And this is my controlling swing low, and this is my breakout segment high from low over there. It's not about whether I get this in the 50% or not. That is related to curve positioning. If it's in the bottom lower area, right? What I want to see here, the main rule for me is the best zones reside where? Below the last pivot point, above the controlling swing low. Below the last pivot point, above the controlling swing low. The breakout segment is only vertical. Zones are drawn horizontal, right? It's with the basing of the high time frame RBR. There we go, Brandy. You're getting it. Why am I looking here? Why am I not looking for a zone here? Right? Let me give you the logic. Why am I not looking for a zone there? Why am I not looking for a zone here? Why? Because where do we trade our zones from? From the base, right? And where is this base? Yes, this is a trend, but if I draw on my trend boxes, where is my base? Right? Where's my base, everyone? I draw on my trend boxes now. Where's my base? Remember the video that I took you all back to? And when Kayla said, do you remember? Keep this in the back of your mind for now. Remember that video? And Kayla said, do you see that a trend is actually just a rally-based rally or a drop-based drop? So where do we trade when we trade a rally-based rally or a drop-based drop? In the base. Therefore, where's the best zones? Below the last pivot, above the controlling swing low. Right? That is why also we treat this as important, because when we're trading a zone, do we want it to do that? No. So you should never be trading a trend where you get a zone here, because that would be too far to break your trend to get to your zone. Right? Brandy, so intermediate low time frame zones should be within those areas. Exactly. Those are the high probability areas you will fare far better right there. Right? This is why you'll see it. And again, no stress, guys. You're not getting it first time. It's okay. You will see it when you go back over the classes that we spoke about. That's why you hear me say it so many times. A lower time frame trend is a higher time frame rally-based rally. That's why I took you 3 classes ago to the exact video where Kayla says that. Who remembers that? Right? And I showed you that has always been part of the education. Now I'm trying to tell you that even if you get a good zone here and a good zone here and a good zone here, if you want high probability conditions, trade from the same area on the trend that you would have traded from a zone, because all a trend is a rally-based rally or a drop-based drop on a higher time frame. All right? Things are falling into place. I like that. Okay, so we do that over and over. And the other reason I showed you that was because of this. If you, let me show you again. Right, we're doing recap here today. Let me show you again. Let me take a higher time frame somewhere, and I'm gonna just show you something. I'm gonna replay it here. Okay, and herein lies the reason I'm showing you this. If you drew on your trend on this time frame, now listen carefully, everybody, to what I'm saying. If you drew your trend on this time frame, right, on the daily, you look up to see if that becomes a drop-based drop. Right? Let me just clear all of this quickly and go back. In fact, let me go to the 4-hour over here, and we're going to do it bigger so you guys can all see it. Right? We're going to do it bigger so you can all see it. Let's say you come to the 4-hour over here. Now you draw on this. Okay? On your 4-hour, you draw your segments. Drop, base, drop. Right? This is also why in that video, Kayla says we need to be accurate where we draw our highs and lows, because they become important later when considering the pivot points. Okay? Now, to confirm that, we want extra confirmation. What do? We quickly just go and check whether or not that is a drop-based drop on a higher time frame. And we can see there's a drop-based drop on a higher time frame. If we went up even higher, we see it even more, right? Drop, base, drop over there. Okay? But here's the problem. If you went to the 4-hour, everybody look at me now. Right? Look at this. Look at the screen and see this. Oh, sorry, this is the wrong colors also. Let me just fix the colors quickly. Because I know someone will be thinking that's the wrong colors. Okay, now look here. If you drew on zones, these are all good zones, right? Here's a zone. Oops. Here's a zone. Here's a zone. And I'm drawing my zones on the graph, everyone. There's a zone. Right? You all see that? So what's happening now? There are a lot of zones existing there. But what is the rule I gave you? Above the pivot point, below the controlling swing high. Now watch. Play price out. I want you to see this. Watch this. Oh, let me draw the last one on here. Right? Look here. Breaks this one, breaks that one, breaks this one, holds that one. What is the characteristic that makes these ones here have better price action? Watch this, everyone. It's above that. It's below that. and it's in that. Who sees it? Right? Who sees it now? Why do we trade that area? Right? Because all it is. So Julie says, how would you know to choose the higher zone in that area? Firstly, it needs to be in this, right? Secondly, I'm going to check what time of day it comes into the zone. If I'm trading London, I'd likely get stopped out on this one. That's fine. If I'm trading New York, I never get stopped out. It hits there and it runs down from there. This is also why I told you guys early on, I'd rather not. Look at this. Oh, thank you for that question, by the way. Thank you so much. Here's my reason for why you should not cover both of those zones, right? If you do that, look at this. With your stop buffer, you hit 2R over there. If you instead, listen carefully, don't get distracted by the chat now, take the loss here, right? So you lose that trade, right? You don't make a win there. And then you take the next trade in this zone. You hit the 4R over here and a negative 1R over there, leaves you with 3R. And on this one, where you covered both of them because you covered the next zone, you still haven't even reached 3R. Do you see it? Do you see now why I say I don't pay for the white space? And do you see why increasing your stop loss gives you a lower chance of actually reaching your target? You're better off taking the loss. Who sees that now? Jesse, you asked how do we choose the one successful zone out of all four of them? Here's what I've been teaching the whole time. I would not even look at these two at all. Why? They are not in the base. So two of them are gone. The third one, I'd likely take and get stopped out on. The fourth one, I'll take and take the winner. So out of 1, 2, 3, 4 zones, I only take 2. And for you guys trading London session only, you'd only get this one. So you wouldn't even get that one. So out of the 4, you'd only choose the one. Right? You see that? No, it's not, because London session, you guys will be asleep. Right? You'll be asleep. Julie says, I'm asking because I would have instinctively have chosen the first one, the smaller one, that broke. Still in the area that you highlighted. Do you always choose the higher one? No, I choose both. I've been saying it the whole time. I would choose both. Both are in that position. Now, here's what I could do, right? These are things beyond this class, everyone. What I could do is I could go look at my strong and weak assets. That's going to tell me which one to be in, and then I likely choose the correct one regardless, right? Out of the two. What I could also do is, if I'm not sure about these two zones, why don't I just bump up my time frames? Let me see what the 6 hour looks like, right? We're just waiting for this. Watch this. Okay, the 6 hours still looks like that one. Let me keep going up until I see what is left behind. Still, what I'm looking for is one of them to disappear and one of them to remain. Go up to the 12 hour. Here's a little cheat code for you all that you didn't know you're going to get today, right? Okay, this one is still there. Likely I'd have taken that one then and I had a stop buffer there. Maybe I'd have gotten stopped out, maybe not. But this is to why I've been pushing it early on, stating I would rather take both of those zones, take the stop on one and take the next one. Because if you look at the actual calculation here, everyone, that if you tried to cover both or even took one, you'd be worse off than if you took a stop loss on the one and took the other, right? Right? So you can take the zone on the downside within the breakout segment session as long as it's still within the base. I'm not sure what you mean about that. With that one, Terry, Terry W, can you explain that? Can you explain that? It's the red one. Do you mean over here as we are going down? No, Terry W, I said. So you can take the zone on the downside within the breakout session. I don't know what the breakout session is. If you mean breakout segment, right? As long as it's still within the base. No, the breakout segment is only the zones in here. None of these zones here I will take at all unless I go to a different time frame with a different curve where one of these zones become inside of a breakout segment. The only zones worth taking based on these time frames are the zones that are housed in the shaded area, right? Are zones that are housed in the shaded area. Remember, this is what that other drawing showed. When we produce new zones on the side here, I can't take that unless I can make this area of the curve, make a new trend on the lower time frame there and get in the trade. This is why it starts with curve, then trend, then entry. Guys, don't apply things outside of that framework, right? I can't trade here because this is the only breakout segment. How can I trade here? If I start with a new curve and a new trend and a new breakout segment, right? And yes, I was in the replay when I chose this, right? I was here. This is where we were. Were you able to confirm the highest? Now, Terry, I wasn't even doing trend curve and all of that here, right? I was simply just choosing and selecting this area. And yes, if you're looking purely at the facing candles here, this will be 1, 2, 3, 4, 5. I might have said, okay, you know what? I don't want to get on that one. However, if we're looking at the weekly, which is the higher time frame I went to, there's a drop, and this candle is a base. It is smaller than that leg in candle over there. Now, I don't want to get into the weeds of it, right? I purely just want to show you what that is, but I can tell you, and I don't want anybody to ask questions on this until we get into a strategy session with me. But this year, right, is one leg down. Why? Because that's an inside bar. That candle is neither higher nor lower than that candle there. Therefore, it's all red candles down. Even though you see a green candle there, that's not something to worry about today and all very rarely going to occur for you. But what I want you to see in essence is the reason we trade from the base. Don't get lost, everyone, in what I'm trying to show you, which is we don't worry about the zones at the bottom here. We worry about the zones that are in the base of our trend time frame. We worry about those ones. Those are the ones that cause price to move, right? You'll see it time and time again. Let me show you again. If we come over here, right? I'll clear all of that now. Everybody with me? Now let's look at it again. Drop, drop, right? And base in between over there, right? If we're drawing on, let me redraw this. First, do it like that. If we're treating this as a trend, right? Drop, base, drop. Not treating it as a zone. Remember, then the colors have to be the same. Treating it as a trend. Okay, this is the breakout segment. If I go down and I try to get entries off of that, here's what I'm going to sit with. Look at the shaded area, everyone. Right? Look at the shaded area. I'll get a zone here. I'll get a zone here. I'll get a zone here. Right? I'll get a zone here. These are all okay zones. I'll get a zone here. Right? And I'll get a zone there. With no gaps candles on, I'll get a zone there. Okay. But I'm going to draw the pivot line on, which is there. What are we learning from this? Below the pivot point, above the pivot point, below the controlling swing high. Now watch. All right. Maybe you get a good trade from that one there. That one's valid, but it likely is a lower time frame trend here as well. That's why it came out to that. Let's keep playing. All right. So where does it actually come from? It goes through all of these and turns from what? Something that's in here. How would you define when it's going to come out of there? Session, right? So these ones, there's others here that go through it that are not in session. That's Asia. Sorry, wait, no. Let me get here. That's Asia. So you won't trade that. That is coming into that one you'll lose on. And this one you'd likely win on. Right? Now you might be looking at this saying, but wait a minute, it actually shot over that zone. Exactly. And that is why I don't take it on the entry time frame, but I take it on the trend time frame. I meant the 3 trades you could do there. You said to set 2 trades without the combined zone. I think when you went up to the 6 hour higher, the lower zone was still there, but not the higher one that did not get stopped out. Why did we not choose the two higher zones near the swing high? Okay, so you're talking about different time zones, so not during Asia high volume, but EST high volume. Yes. So what I'm saying is many of these zones would not get taken because they are outside of the high volume session. So you take the ones that are inside of the high volume session, but also the biggest criteria I'm trying to teach you all is between this and that is where you find your best zones. If you're not looking there, you're doing yourself a disservice, right? And that is on your trend time frame between the low and the high of your trend time frame. Everybody with me on that? Okay. Good, good, good. Now, I got 3 minutes left. We won't be able to do any more questions here, right? But here's what I'm going to do. I want you to see something. Putting it in as a recording. We will recap it again. Everybody will do the whole process again in the last class and plus the prop firms, and we'll cover it all. You have to order KFC 3 days in advance for Christmas. Wow. South Africa's not alone. By the way, earlier I looked at the per capita thing, right? Friday's the last, yes. Earlier I looked at the per capita thing, and we have in South Africa 11 KFCs per 1 million. We have in South Africa 16.5 KFCs per million people, and you guys have 11 per million people. You realize it's almost 60% more than the US, where it comes from? That is insane, right? Now, watch here, everyone. This is how we end, right? I'm not going to be able to take more questions here. And again, the lovely Nicole, thank you for staying on with me. If you have to go, I understand, right? 16.5 is okay. Look at this, right? Okay, look at this. Real quick. Put it back to current price. We're going on. Let's do the 4 hour today. 4 hour today, right? 4 hour. From current price down into the left to the nearest demand zone. From current price up into the left to the nearest supply zone. If we're having trouble finding it, we throw on a line and we just look above it. Where's our nearest supply? You see a rally there, a base and a drop. But the problem is that candles are nearly the same size as that leg in and leg out. So what must we do? Go higher. And if we reach a point where it's completely high, higher than anything else, that is just a floating curve. That's the highest point in the market. So on the 4 hour from there till there, that's our curve. Where are we? Low on the curve, right? That's our first one. I'm not looking at the chat at the moment. I'm just trying to get through this. Then we go to, let me skip gold because gold is all-time highs in any case like yesterday. Go to 6B. And I'm going to put that on whatever color I want to put it on. From current price, down and to the left to the nearest demand zone. There. Up and to the left to the nearest supply zone. Can't use this one because this candle's not closed. Did you learn something as well? Move higher. And we get to this one over here. Why can I use that one? Because, sorry, not there. Why can I use that one? Because we went into it, but not more than 50% and not twice. So that's a usable curve zone. Where are we on the overall curve? Low on the curve. Right? Low on the curve. Go to the next one. Let's go NG. 4 hour. Same approach. From current price, down and to the left to the nearest demand. Right? Up and to the right to the nearest supply. Rally, base, drop. That candle's not as same size as that. So I can use that. Create the curve. Right? Oops. Wrong one. Where are we at current price? Just entered into middle of the curve. But we kind of lowish still. Right? Okay. NG. Then let's do silver. Clear all of that. From current price, down and to the left to the nearest demand. That candle's not closed, can't use this. This one over here, we can. Why can we use it? Not in it more than 50%, right? And not twice in that zone. Then, what about current price? All-time highs. Create the curve. Oops, I keep using the wrong one. And where are we? High on the curve. Okay. Now I've got 4 assets on, right? 4 assets on, right? This I can use leg out, leg in, hit once, can use that curve. Okay. 4 assets on. Now, real quick, this is what I wanted to show you. Not going to go to the 5th one just for the sake of time. When I look at this one, I'm higher the curve. So just on curve analysis, I'm high on the curve on an uptrend. Can't take that. Right? High on the curve and uptrend is nothing to take. The rule state on high on the curve, you want to be in a downtrend, right? To sell and supply. Go to NG. I'm low on the curve. Can't take that. So I keep that yellow. 6B. Low on the curve. It's a possible one, right? I got to check the 10. MNQ. Low on the curve. So it's a possible one as well. Got to check the 10. While we're at it, let's check the trend. Go from 4 hour to the 1 hour. What do we have? We have a terminated trend. Terminated down, terminated up, sideways. So what? No longer taking this one. Deselect that. Go to M6B. Let's see what the trend is here. Oops. We just terminated that trend, right? So can't take that. Go to NG. We're still in an uptrend, right? Overall, I'm just making it simple. You're still in an uptrend, right? Okay, so this one's a contender. Go to silver. At all-time highs, can't take it. Left with NG and M6B is no longer valid. We've got one trade and one trade only. It has been 4 minutes since I started. No, 5 minutes since I started that. And I'm left with one chart and one chart only that I can trade. We made a breakout segment. My only valid zone is there. And now I can take an attempt at taking that trade. That's it, everybody. I wanted to add that quick repetition right there at the end. Merry Christmas to everyone. Right? Merry Christmas to everyone. Look at that. In 4 minutes, I'm left with one particular chart to trade. And the only 2 things I looked at was trend and curve. And now I can take a shot at it. Right? Remember, everyone, what is the reason for the season? The food will be great. The time with the family will be great. But if there is no Christmas Day, no birth of Christ, there is no death of Christ, and there is no resurrection of Christ, which means there is no life in Christ, which means that we are all doomed. Because Paul says, if there is no resurrection, then my preaching was in vain. But if there is no birth, there's no resurrection, there's no death, there's no remission of sins, there's nothing. If Christ didn't say, send me in heaven, send me, let me go and save them, and then go and tell God, I have not lost one of those you have sent me for, then we would not be able to be here. So as we sit around our tables and as we enjoy the food, let us not forget who has made it possible in the first place that we can do this. Every now and then I remind my church, do you guys know, I don't know when last you thought about this in this way, but you know that you are saved? And do you know what you are saved from? You're not saved from the devil. You are not even saved from hell. You're saved from the wrath of God. The Bible says it's a frightful thing to fall in the hands of a living God. In fact, this might surprise some of you because we read it so often, but scripture says it pleased God to crush Christ. Pleased him. Because what was he crushing? Sin, right? So if we were saved from the enemy, that'd be one thing. That would be amazing. We'd be saved from the enemy. But we are saved from the wrath of God. That's a far bigger thing. And it all started with, for unto us a child was born, and a son is given, and the government is on his shoulders. And upon his throne, there will always be Christ reigning. Right? It all started there. So I want to encourage you all today. For the joy, yes, for the joy that was set before him, he endured the cross. And we were that joy. He saw us in the future. Right? So we're not saved from Satan. No, that's not what scripture says. It's a frightful thing to fall in the hands of a living God. That's what scripture says. We are saved from the one. Doesn't the Bible says, don't fear him who can put to death the flesh, but fear him who can put to death the spirit. Think about that. Think about what the Bible is saying. Don't fear the enemy. That's temporary. Fear God and him only. So when we think about Christmas Day and Easter and all of those things, we are great, and we should enjoy it greatly because we are saved from the wrath of God, placed into the sweet arms of God. God is righteous. and he righteously allowed his son to die so that we can experience the fullness of his love. Right? Thank you, everyone. You guys be blessed. Enjoy that Christmas period. Enjoy it to the most. I will see you on in South Africa. We call it Boxing Day. No idea why, honestly. I don't know if you guys also call it Boxing Day, but the day after Christmas is called Boxing Day here, right? And in South Africa, you also find we have a lot of public holidays that we don't have no idea why we have it, but we enjoy them in any case, right? My father-in-law says it's because on that day everyone fought over the leftovers, so they called it Boxing Day. All right, we celebrate that because my husband is English. Okay, then it's another British thing we got. It's another British thing. Love you all. You guys be blessed. Have a blessed time with your family. Sure. The Colonel thing is going to catch on. I know this. See you all. Bye bye.